All right, folks, we're back with DoubleLine Capital founder, CEO, CIO Jeffrey Gundlach. And Jeff, I'm going to pick up on the task force. You know, I was on the fence about Kevin Warsh, and I saw him speak at an event, and I had a chance to talk to him a little bit, and he kind of blew me away with his ideas and his thoughts. And I think these task force, and you talk about buying time, not only allow him to buy time, but rejigger the playing field, so to speak. You know, if he goes by the status quo, they would have to hike rates right now. If they reimagine this thing, better sources of data, more efficient data. Listen, the Dallas trim mean, the inflation read versus PCE core. You know, we may be, in his mind, far closer to that 2% target already. So I think he wants to change the apparatus itself and then go from there.
Yeah, I think that's right. But what you said, Charles, you just alluded to something that's very important, and that is if you looked at a scatter chart of that we create, I think it was created by JP Morgan Asset Management, and so I want to give them credit. But they took a scatter chart. They just had on the y-axis ISM manufacturing prices paid, and on the x-axis ISM manufacturing employment. And as you would expect that when you have low ISM prices paid and low ISM employment, you'd be at the lower left of that scatter chart. You would think the Fed would be easing almost all the time when you're down there because you have no inflation and you have very weak employment, and vice versa. When you're up at the upper right of that chart, you would have high prices and high employment, and you would think the Fed would tighten. And I took their chart and did one thing. I enhanced it with one idea. And this is up on my X feed at Truth Gundlach is the handle. And I showed that chart's on there. And what's fascinating is that during Volcker was the only time period during the 80s, 82 twice and 85, where you actually had the Fed hiking with the lower left. So low inflation and low employment. They were hiking because Volcker wanted to get rid of the inflation. And the only examples in the upper right of that exhibit are Arthur Burns, who was basically browbeaten into over-easing. And the fascinating thing is there's only one dot in the upper left, in the upper right, where there was actually an ease and not a tightening. And that was Volcker, believe it or not. So Volcker really was his own person. But interestingly, where we sit right now on that scatter chart, as of the most current data prints, we're in that upper right. They should be hiking based upon this data and not even thinking about easing. But you're right, all things are not equal anymore. There's got a new sheriff in town at the Fed. And I like the fact that he's doing new ideas. I've been saying for years, and I can prove it, the Fed has been following the 2-year ever since we had Bernanke. It's just a following of the 2-year. There is no need to even listen to the Fed. But now Warsh, I think, is not going to follow the 2-year. And what I like about that is that's what Volcker did. That's how we got rid of inflation. Volcker, when the 2-year Treasury was at 15% in the late 70s, early 80s, he hiked rates to 20% when the 2-year was at 15. And with the 2-year still at 15, he dropped rates down to like 14.5. So he was absolutely leading the 2-year and not following it. And I like that. I like the idea that we have someone that's just not an automatic, an automatic pilot. And I think that's Kevin Warsh. And I'm optimistic that he's going to be a better Fed chair than Jerome Powell.
So am I. Hey, I've got 3 minutes to go. So much to ask you, but I got to ask about the topic du jour. This Kimi K3, the leapfrogging of this technology by China from 18th place to number 1, according to some, to the government intervene. You've got some Republicans that are saying they distilled this. In other words, they stole all this information from Americans, put on a little layer on top, and then they're going to sell it back to our companies, and that's not capitalism. Where do you come down on this?
Well, I certainly don't think that should be allowed. I remember my uncle made the Xerox copier commercially viable. He basically invented the commercial photocopier. And he spent the last 20 years of his career fighting the Japanese that were stealing all of Xerox's photocopy technology. They would basically, he'd have to go to Tokyo and sit in a trial. And what they were doing was taking every exact thing exactly the same and turning one part from metal to plastic. That's it. And so he was miserable about that. And I think that's what the Chinese are doing. And it's not surprising because the Chinese have so many students in our university system that get trained in some of these technologies, and they go back and they share that information, of course, with the Chinese companies. I think that clearly this is something that needs to be addressed.
Before I let you go, where do you see markets going second half of the year?
Well, it's a really interesting situation. Stocks are all over the place, particularly single name stocks, which are really in a crazy volatility period, while the VIX is only at 17. Meanwhile, bonds are stable as a rock. Right now, my best indicator, and this is hard to believe, the 10-year Treasury should be, and this has an R squared going back 40 years of 0.93. It's an incredibly good indicator. The 7-year moving average of nominal GDP and the German 10-year. I don't have time to go into why that works, but right now that says that the 10-year Treasury in the United States should be at 4.62, and right now it's at 4.63. And there hasn't been any volatility in this now for about 2 years. So I think in bonds, you're just trying to avoid credit blowups at this point and earn something like the 5-year Treasury yield plus a spread, so you can get maybe around a 6% out of a bond portfolio. But I want nothing that's triple C, nothing that's weak single B. I want things that have real honest to goodness credit fundamentals. So this will be interesting. I think the stock market's probably started a rise period now.
Right.
I think as we go into earnings, I think we're going to get some good stuff out of some of these companies. And that's what I think started the rallies. People don't want to be short going into what's perceived to be a good earnings season.
Jeff, I really appreciate you. You don't know how much, I've always admired you. Thank you so much. We covered a lot, and there's a lot more to cover. So hopefully I'll see you again real soon. Thank you.
See you soon, Charles. Thank you for having me.
Thanks a lot.